Hi everyone. So in this video, what I would like to focus our time on is looking at purchase transactions. So before we dive into the accounting for merchandising business, their portion of it, I just want to jog your memory of what a purchase transaction looked like. So remember in chapters 1 through 4, we would always look at how we would, maybe we were buying supplies or we were buying land, right, or buildings, right? And so there was one of two ways in which we could have looked at that transaction or process that transaction. So number one, the way we looked at a purchasing of supplies was we would debit supplies of maybe X amount of dollars, and our credit would be cash. We would pay, right? Maybe if it was a staple, we would go to Staples, hey, we need the supplies, and here's the cash. Another option of buying supplies was a debit of supplies of X amount of dollars, and then my credit would maybe be an accounts payable, right? It was hey, I promise to pay you later. I will promise to give you. It was us giving an IOU to a supplier, saying, hey, I promise to come back and pay you later, right? And then usually when we came back to pay, it was a debit to our accounts payable and a credit to cash. Okay. So taking on that same idea, instead of us buying supplies, now we are a merchandising business. And now what we're going to do is we're going to buy inventory. So our debit is now, instead of having supplies, right, we're going to take that out and now replace it with the same idea, same concept, except now we're going to replace it with inventory. Our debit will be inventory and our credit would be cash if we decide to pay with cash, or we're going to do a debit to inventory and a credit to accounts payable. Now, what I will tell you is most times we're going to be doing this transaction only because it makes more sense, or most companies would prefer to hold on to their cash than to shell out any kind of money right away. Okay. All right, so moving on, now we have an invoice, right? So after you usually pay, after you usually, buy your merchandise or inventory, you usually have an invoice, right? Or something of that nature. Now, what that looks like for us is something of what you see on your screen. The invoice, maybe if you have a CVS or Walgreens invoice, it's super long. But anyways, most of your invoices have the general information. It usually has, if I can mark this up, you have where you're buying your inventory from, right? The supplier. It has who was sold to you. So for us, we are Net Solutions. It is our when we bought it, when it's going to ship. We're going to talk about terms later. We're going to talk about our shipping terms later. Then we're going to spend some time talking about our terms in a second. Then we have our invoice date, the quantity, description. Looks like we're buying printers. This is the cost per printer, and because we're buying 20, if we did 20 times 150, we'll get 3,000. Okay, so that's typically what an invoice look like. Now, if we're looking at credit terms, let's dive into this, right? So I think I have a little circle that I've already defeated the purpose of, but that's okay. So let's talk about what some credit terms. Now, credit terms, this is 210, or how we would read it is it's 210 net 30. Now, what 210 net 30 means that is if you pay this invoice within, if you pay this said invoice within 10 days of them shipping it to you, within 10 days, they will give you a 2% discount. However, if you do not pay this within 10 days, so on day number 11, okay, if you do not pay this invoice within 10 days, you must pay the full amount of the invoice. No more discount. Must pay full amount, okay, which is the $3,000. Now, like anybody, everybody likes a discount, right? Because it makes the inventory or your purchases or your merchandise is cheaper, right? So the first question is this: why would the seller, right? Alpha Technologies, why would the seller offer a purchase discount? Well, this is simple enough. They're offering a purchase discount because they want the buyer to pay for it a lot sooner. So the idea here is you can pay in 10 days or you can pay in 30 days. The difference is about a 20-day difference, right? So the seller is willing to give a 2% discount if they can pay 20 days earlier, right? So they want their money a lot sooner so they can start their process of, maybe paying off people, so forth and so on. Now, the next question says, what are the advantages for the buyer? Well, here in this example, it is advantageous for the buyer to take on the discount because their inventory is a lot cheaper. So imagine you go to a store, maybe JCPenney's or Macy's or something, and you have a coupon, right? You're going to offer that coupon to them or provide that to them because you want that shirt or that blouse or those shoes to be a lot cheaper than what the price tag says, okay? So your inventory or your merchandise is cheaper. All right, so in my next questions, it says, when and what amount is due if the buyer takes advantage of the 210? Now, hopefully, said in looking at this, if the invoice date is January 5th, 2019, hopefully you counted 10 days from there, and we would say that this invoice is due on January 15th, 10 days away, right? Now, in calculating that, in looking at that, we would say, okay, what amount is due? Now, always, we're going to assume we're going to always record it at the discount. So whenever you're doing any of these transactions, we're going to always assume that we're going to take advantage of the discount. So if I'm doing this transaction and I am recording this, on January 5th, my journal entry looks like me doing inventory, a debit to inventory of the discounted amount, us taking advantage of the 2% discount, which is the $29.40, and then a credit to accounts payable. And then on January 15th, 10 days from now, we're gonna do a debit to accounts payable, $29.40, and then we're gonna pay out cash, $29.40. Okay. Now, how did we come up with the $29.40? Well, there's a couple of different ways you can go about doing this. I've seen it so many ways, so it's up to you guys really how you would like to pursue it. But you can go with option number one. Option number one, you look at what the discount is. So you do $3,000 times the 2% discount. Remember, this is 2%. And that would equal $60, right? That is the discount. And because this is the discount, this is what you will not pay. You're going to take this $3,000 less the $60 discount, and the amount you owe is $29.40. Or option number two is, because you're getting a 2% discount, what you're left paying, right? So you have to pay 100% of that represents 100% represents the full amount of the invoice. You don't have to pay for 2% of it. Therefore, you're left with paying for 98% of it. So what you can do in option number two is do 3,000 times the portion, which is 98%, which you're responsible for, which will give you the same $29.40. Do it however you like, doesn't matter to me, as long as you get the correct answer, okay? So again, taking advantage, we will always record it with the discount, no matter what. Everyone will record it with the discount because we recognize that if we don't, that would be like leaving money on the table, okay? All right. So again, we're looking at it from the perspective of us as the us buying, we are the company, we're buying inventory, okay? So net 30 says if you do not pay within the said amount of time, right, within 10 days, on day number 11, no matter what, don't care what happened. Maybe the buyer lost the invoice and forgot to give it to payables, doesn't matter. They must pay, we must pay the full amount of the invoice, which means we must pay the full $3,000 on February 4th, 30 days from now, okay? So we've already looked at the amount. So this is what my journal entry looks like, again, if I'm taking advantage of the discount. Always record it with the discount, okay? All right, so with that, take a second to look over this transaction or this purchase transaction example. And when I come back in the next video, we're going to look at how to solve for this, okay? So take a second, do it yourself, and see if you follow the same logic as me.